Crypto and fintech bubbles. What is and what is not a bubble? What could go down or collapse? Let's have a look. So, crypto, firstly, the idea of decentralization is a core part of their philosophy. What are the downsides to this? What if someone steals your money? Where do you go? Let's look at the regular use case quickly. Someone steals your money from fraud, online fraud. I've had this happen to me twice in the past. The bank will just reimburse me. If someone steals your crypto, where do you go? Or if a big exchange like FTX has just collapsed and lost 30 billion, where do you go? If your money goes, because it's deregulated and decentralized, I don't believe there's anywhere you can go. That's an interesting point, I think. Who wants to be anonymous, in this system with crypto? Well, typically people that don't want to be found, crooks. Yeah, they don't want to be found, do they? Bad actors, bad governments, bad groups, splinter groups, terrorists, maybe some of the fringe society potentially. Where's the value in crypto? I've always struggled with this. When somebody asked me if they should buy crypto in 2011, then 2016, 2018, I'm always like, I can't see the value in specific coins. If crypto ended, who would actually miss it? Well, it's most probably going to be the bad actors, the bad governments, the crooks, maybe people that are speculating. There's a hell of a lot of speculators in this world now. In terms of the crypto world, it is huge. Diamond hands, people that hold on. But there's a lot of people that have lost a lot of money as well. I know quite a few people that have lost tens of thousands, sometimes hundreds of thousands in crypto. Fortunately, I didn't touch it, but who knows? I don't know who's going to be right. I actually can't find the value in crypto. What's the value it's producing? With something like a stock, like Facebook, where I work. Yeah, at least they have things like WhatsApp, which are really good, providing value and if a restaurant stock, like Cake Box, people like the cakes, they buy birthday cakes, and would people miss it if it was gone? I don't know. So, and the other thing is, where would the photos be? Where would the memories be? When people miss something, it's normally associated with sentimental or sentimentality or like something that's produced something good or fun or joyful or something they can share with friends and family. I don't think that's the case with crypto. Even if you think about, the leisure sector or holidays, people spend a lot of money on holidays. If a holiday company went bust, like a hotel company, people might miss it. They have experiences, they have memories with that. With crypto, where would the photos be? Where would the memories be? Where would the sentimentality be? I don't think anyone would miss it if it was gone tomorrow. And where did I invest? I thought I was an idiot really, for missing out on the coins and things. Turns out at the moment, at least, it wasn't a bad decision. I don't know if I'm going to regret it in the future. But what I did is I invested in a platform. I invested in a platform called YRX, which I've done some videos on. Do platforms, are they immune? No, they're not. They're not immune. FTX, one of the biggest platforms. I only heard about it about a year or two ago. I watched some interviews with Sam Bankman-Fried, and I was fairly impressed with him. I thought he was diligent, intelligent, and I thought he wouldn't fail. And lo and behold, in the last few days, it has completely collapsed. And platforms themselves can collapse. I think YRX themselves have maybe 5 or 6 million users. Doesn't mean anything, but I do like the approach of the board of YRX. They've got a long-term view. I actually interviewed for the CMO role. Didn't get it because I didn't have enough international experience at the time. It's a shame, really. I'd probably be worth millions now from the equity that I would have garnered from that CMO position. But anyway, I work at Facebook now, so I don't mind work for WhatsApp. Did it work? Well, I think YRX is doing okay at the moment. Is it immune to this bubble-like nature? No, it's not. Is crypto a bubble? I do believe because it's hard to find the value still, and there's so much, fundamentally that is risky. If your values plummet, who's going to care? No one. And if someone steals your money, who's going to care? No one. If a platform like FTX or YRX goes down, who's going to care? No one. So whereas if a bank goes bust, who's going to care? Kind of everybody. Because people have mortgages, and people have real wealth tied up, not speculative wealth with crypto. Let's move on to fintech. What are the myths in fintech? Well, there's a myth that fintech is really, really hot and an area where you can't lose money. And I think when an area is when some people have this opinion about a vertical or an area to invest in, I think that's very, very risky because people overlook a lot of things. Another myth is that if a fintech gets scale, it will be profitable, whether, it can be sold on to somebody or, it's just this myth. Oh yeah, it's growing this, in users and it's growing in maybe geographically. But if you stick around and listen to what I've got to say about this, because I've worked in fintech, I've worked for banks as well, so I kind of know what I'm talking about. I'd say more than most when it comes to this. I've also invested in the sector and in banks itself. So the other thing, which I think is another area which is a bit risky, is that users themselves invest in fintech, and I'm guilty of this as well. I'm a user of fintech in Moneybox, in a bunch of others, Chip, and all sorts of others. And when you get thousands of investors, angel investors, retail investors, that are users that are passionate about the products, they might not always be able to delineate between their passion for the product and their potential for profit. And they might buy into this, fintech is growing and the pitch decks are very compelling. They look very sexy and users invest and that further inflates values. Also, as fintechs grow, they find it really very difficult to pivot. There's a lot of reasons for this. Number one is just psychologically, when you have 10,000 users, you don't find it difficult to pivot. When you have 3 million users, a lot of founders and founders teams and founders advisors and VCs, etc., put pressure not to pivot too much. There's too much risk behind it. But the problem is if you're trapped in areas which aren't profitable, I'll stick around. I'll talk about some of the big ones and some of the ones that could fail in this space. Then sometimes you need to pivot, and this is a real red flag for me. And I think a lot of fintech is going to be kind of fucked in the future. But it's just obviously my opinion. What about the other things like FOMO? I think feeds this kind of irrational valuations. People think they're going to miss out on the next round, and valuations are kind of just going up every round. If you think about Monzo and Revolut, the two biggest angel stroke venture kind of wins in the fintech world in the past kind of 5-6 years. A lot of people think it's going to be the next Monzo, it's going to be the next Revolut, and I don't want to miss out. It's only valued at 100 million now. It could easily be valued at 1 billion. And I've made this mistake as well. Do I believe fintech is a bubble? Yes, I really do. Because like crypto, there's a lot of variation. In crypto, you might have 10,000 coins. In fintech, there's thousands of fintechs in the world. And what's going to happen? Well, I think that basically I'm going to stop sharing my screen now and talk about my experience and what my thoughts are on this. Well, my thoughts are that a lot of companies out there are nowhere near profitability in the fintech space. So they focus on things like cards, like debit cards and current accounts. And I'm going to scoot up to the top slide here. 1 second. If we go to the top slide and just talk about the big players in the market. So Monzo is one of the largest fintechs and angel investments and venture darlings of the fintech world. It has a lot of users, and it consistently loses between 100 and 300 million pounds a year. I'll say that again. It's losing hundreds of millions every year. Revolut is valued at 35 billion. Guess how much it made last year? 30 million pounds. The valuations are way off. And look at this, when you type it in, the first thing that comes in is the fact they've got a credit card or a debit card rather. I've worked for banks. I worked for Barclays and NatWest, and I know what works. I worked in NatWest and enabled them partially through my work, and not just me. Obviously, I'm working with teams and things. But when I was working with NatWest last year, I helped to accelerate their profit to over £4 billion. So let's think about this. Revolut was making 35 million last year, valued at 35 billion. NatWest made £4 billion and is valued less. than Revolut. It's a kind of 100x difference in profit, but Revolut is valued at the same in the same token, the same clip. Now, for me, where do banks make money? Banks, I hate to break it to you, there is a limited number of areas that banks and anyone in the finance space makes money. It's quite simple. Essentially, you can make money from scale, but you need to have substantial scale, either in terms of volume or value. What I mean by that is like investment banks make money and big corporate banks make money from the value that they trade. So they might only work with, 1,000 high net worth individuals, but because they're managing trillions or hundreds of billions, 1% of that is still a lot of money. So that's on the value end of things. On the volume end of things, you can make money if you're absolutely enormous. Like TransferWise is the biggest player in the kind of transfer market, but they are taking like sometimes 1 or 2% fees for FX, and you can make money with that. It's very difficult. Margins are low. But there's some areas you can make money in there. Where's the real money made within fintechs? It's the middle ground. So it's in places like lending. Lending makes a lot of money because it's both volume and value. So a bank like NatWest or Barclays will make a lot of money from mortgages. Why? Because they might have 1 million mortgages and they might make 50,000 from each mortgage. I can't do the maths in my head for that, but it's a lot. And so it's both a volume play because they've got millions of highly valuable debt and in mortgage debt, stable debt, and it goes up with inflation because interest rates go up. And also with loans as well. A lot of people have car loans or they might have loans for whatever. And that's where the value is. Now, what are fintechs doing? They're not doing anything like that. They're doing loss leaders. I know this because NatWest, when I was working at NatWest, it was clear, in the calls we were having, I wasn't in this team. Well, I was in the team, but I wasn't responsible for it. And I chose it because of the reason it's too difficult to make money from cards. Debit cards and credit cards don't really make money. You might think they do because, they take a high interest rate. And from a consumer's perspective, you think, shit, I'm paying loads of money for interest and blah, blah, blah. But actually, they don't make money. That you have to spend a lot of money acquiring a customer. There's a lot of fickleness. People will move from bank to bank. They'll transfer consumer debt. The bank doesn't make any money from both debit or credit cards. And the fact that all these fintechs, are flashing around that they've got a new card, it's nonsense. It's not going to make any money. If NatWest don't make much money from credit cards, if Barclays don't make much money from credit cards, I don't think a new fintech is going to make money from credit cards unless they get to maybe 1 billion users. I just don't see that happening with the fragmentation of thousands of fintechs. I don't think any fintech is going to get to 1 billion users. I might be wrong, but I think in general, the real value with fintech is coming from it comes from debt, from loans and mortgages, also in investment as well. So taking taking management fees for investment, I think, is one area that is profitable as well. So 1 or 2% on millions of people's net worth, it adds up to quite a lot as well. That's on the equity side of things. If you think it's almost the same equation, if you take a percentage of people's debt, i.e. with mortgages, it's a large number, so you're going to make a lot of money. Likewise with on the equity side, if you take a percentage of people's equity that grows every year, if you think about millennials now, people in their 20s and 30s now, they're going to have a lot more money and a lot more equity in the market in 10 or 20 years, in stocks, maybe in crypto, whatever they're going to be investing in, they're going to have more equity, right? Because people are continually investing more. So I do think there's some value in that. And I've backed Moneybox because I think Moneybox are going to be profitable. And, there's a lot of value in holding pension assets and involved in holding equity assets as well, especially as they grow. But how many fintechs are doing that? Well, not very many. I can tell you that. Fintechs are enamored with the next coolest thing. That there's a lot of FOMO within the leadership of fintechs. I know this because I work for the largest fintech in the world, which is Finastra. The Alibaba's bigger, but the pure fintech play, Finastra is the largest, right? and I worked with a platform. I managed the platform on the demand side for fintechs, and it's called FFDC. Stupid name, but it was like fusionfabric.com or whatever it was. And a lot of these fintechs were just scrambling around to produce new technology, which I don't know if they were thinking about profitability. That they're mostly thinking about trying to get new users and scale. Um, and it wasn't every fintech, but it was a lot. They're thinking about the new sexy thing like a chatbot or whatever. And I always thought that WhatsApp were going to come out with something better, and lo and behold, I now work for WhatsApp, doing WhatsApp for Business, and hey presto, WhatsApp for Business do have chatbots that millions of people use. So going back to it, do I think crypto and fintech are in bubbles? If we look at the left, thousands of coins, where's the value? I don't think there's much value at the moment. Call me a hater, call me whatever you want. I think you can see it in the name, crypto, like it's a mess, and I don't think there's going to be value there. Nobody's going to miss it. I don't. The other thing is, someone smarter than me made a good point yesterday. Paul, can't remember his second name. He's a fund manager. I've respected him for like about a decade, and he made the point that like crypto people think that it's not inflationary because there's limited supply, but it's only not inflationary if you don't transfer it into cash, which I thought was really interesting. Like, if you have like 10 million in crypto and then you want to transfer it into cash, where does that money come from? You're transferring it into cash, so it's got to come from somewhere. So it is going to inflate anything once you transfer it into anything else, or if you just buy stuff. Like whenever you transact, if you're creating crypto, you're basically printing another type of financial asset. Once that's transferred into the economy, whether it's cash or buying things, it's going to inflate things. So yeah, it wasn't my argument; it was his argument, but I do think it's really valid. And with fintechs, I think there's thousands of fintechs. They're all going after the next shiny thing. They've got lots of value. They've got lots of users. Are they profitable? No. Are the valuations at risk? Yes. Where do I see the value? As I mentioned, I see the value in holding debt, in holding equity, and getting a slice of that. But obviously, I think it's going to be the biggest and most financially robust and financially conservative companies that are actually going to do well from this. Maybe YRX is one of them, I hope. Maybe Moneybox is one of them, I hope. Can Revolut pivot to make money? Probably, maybe, but can the next 1,000 fintechs or the current 1,000 fintechs make as much money as they're being promising? I don't think so. I don't know. I think once venture dries up, once angel investing dries up, or people's opinions dry up, I think that the flow of capital will decrease, and I think it's a risk to valuations for fintechs. And I think then it will be like, who's profitable? And out of the 1,000 fintechs that are out there, it might only be 10, or it might only be 20 or 30. And that's where I think there'll be a massive correction in the fintech world, like is happening in the crypto world. I hope that that this makes sense. I use logic. I'm not I'm not a financial advisor. I just use financial logic. I'm not the smartest man in the world. I do think that my grandfather was probably one of the most smartest people that was alive when he was alive. So hopefully I've inherited some of his genes. 25% chance I have. I'm not going to go off and invent solar energy or laser eye technology, which is what he invented. But I do think I use logic. I've done some kind of tests, and when I've been at different companies, and one of the tests was like 100 questions, and it rated me 99% logical, which I thought was quite a compliment. Other people in the team thought it was unusual, but I don't mind that. And I just use logic to look at these things. I can't predict the future, although I have predicted a few things like the global pandemic in December 2020, and predicted inflation and interest rate rises. So fortunately, the reason I can talk about investing so much is because I fixed my mortgage and I've got a lot of free cash flow not a lot, but I'm still a retail investor, but I have some relative cash flow to invest. So that's where I'm talking from. That I think that qualifies me to a certain extent, using logic to assess good investment opportunities. Where's my track record? I've invested in the listed equities that have done very well. I've invested in growth companies like Domino's Pizza, which went up about 10x, which was good. And I've also invested in cyclical companies. So I spotted the rebound, 5 years before, 5 years before anyone else really. So I invested in house builders in 2010. I think there was one fund manager in the UK that also spotted it. I think it was Terry Smith, or there was another fund manager in the UK that spotted this. But I think I was pretty much one of the only people in the UK really to spot this in 2010. So I bought, Barrett Developments, which again, using financial logic, just thought it had low margins, and once it rebounded, that means that the bounce in valuation would be the highest, and I was completely right. So I've got experience with growth stocks and also cyclical stocks, and I got into angel because I always wanted to invest early. So I like the fact that I could, or at least I think I can pick quite well. And I'm testing myself by investing in angel. But on these two specific areas, crypto and fintech, I'm concerned about it. I think valuations have gone astronomically out of whack. I can't see a lot of these fintechs or cryptos kind of ever making substantial money, profits, not revenue. I think someone smarter than me said that revenue is vanity and profit is sanity. I think in times like this, it's good to think like that, because only the profitable survive. Although you could argue that those that can raise capital, forever, ad infinitum can survive. But I think VCs and angel investors do respond to both fear and greed and logic. And when you add in logic and fear, I think that's when valuations might decrease. Are there any sectors which I like? Yes, on this channel I talk about robotics. I talk about software as a service, and I think the right robotics companies and the right software as a service companies will do well. Do I think that they're in bubbles? We'll have to see. I might do a video on that in the future. I do think valuations are pretty high across the board. I think there's some exceptions in the listed equity world. I think that fear is really in the listed equity world, and I do see some value there. I did a recent video on a growth franchise company called K-Box, which I check that out if you want to learn more about what I think there. But I do see some value in some companies. It's pretty late here, guys. It's maybe 5:30 a.m. But I just wanted to make this video. It's been top of mind. And I'm not always right, of course. Nobody's always right. But I think with angel investing, with venture, with investing in equities, if you're right, 2 or 3 times out of 10, then you're going to do quite well, and that's kind of the way I see the world. I'll try and be right, 3 out of 10. If I can be right 5 or 6 out of 10, then that's great. And I was right with the pandemic. I saved a few family members' lives there, which is great. And I've been right with inflation. I fixed my mortgage rate, and that's how I'm able to invest 5 figures a year, which I'm happy with. Anyway, guys, hope you enjoyed the video. Knowledge is power, especially the right kind of knowledge and progress everything. I'll see you guys in basically the next upcoming video. Take care. There'll be some other videos around that you might find helpful, of interest. So you can support the channel by liking, subscribing. See you in the next one. Take care.